You think gold is a safe haven? Sorry, Simi just locked the door and pulled the ladder away at the same time. Last Friday gold and silver suddenly tanked, and a bunch of people immediately jumped out saying, "Oh, it's because Trump nominated Kennan as the next Fed chair. He's a hardcore hawk." Here's the thing. That explanation is way too naive. It's like watching the first episode of a show and pretending you already know the ending. When a market needs to fall, someone always has to play the scapegoat. But the real knife isn't in the headlines. It's in the rules. Let me be clear. In mid-January, the Chicago Mercantile Exchange quietly did something huge. They changed the margin requirements for gold, silver, platinum, and palladium from a fixed amount to a floating percentage based on the notional contract value. Sounds technical, right? In plain English, it means you want to stay in the game? Pay up first. And what happened next? The actual margin ratio jumped straight to 8% to 16.5%. Doesn't sound dramatic? Let me translate that again. Margin costs exploded by 60% to 80%. And the tougher move came right after. CME's latest notice says that starting February 2nd, margins for gold and silver futures will rise again, and platinum and palladium are going up with them. Basically, the entrance ticket is about to double. Of course, the exchange will act innocent. The market is too volatile. We just need to protect safety. Sounds reasonable, doesn't it? It's like a casino saying, for your own good, we're raising the minimum chips. The essence is simple, deleveraging and forcing people off the table. Is this something new? Not all. Back in 1980s, the Hunt brothers tried to go all in on silver and challenge CME. CME rolled out the famous Silver Rule 7, slashing leverage. The result? Silver crashed from $50 to $10, 5 times down, and their capital chain was wiped out on the spot. Then in 2011, history repeated itself. Silver hit $50 again. CME kept hiking margins day after day. And after a 30% drop, the market slid straight into a long bear cycle. So don't be naive. Precious metals have never been a playground for small investors. It's an arena for heavyweight players. When some people have made enough money and the market needs to cool down, needs a harvest, the easiest tool isn't confrontation. It's changing the rules. Why? Because they're the biggest dealer at the table. And what's the deeper logic? It's not just about profit. It's about the dominance of the dollar. The U.S. can tolerate gold rising slowly, using it as a kind of global reservoir. But it will never allow worldwide capital to truly abandon the dollar and go all in on gold. The moment the trend looks dangerous, the sickle swings down. Hurt you once, and you'll run right back to dollar assets. This playbook didn't appear today. It's a web woven over decades by finance and media together. America's two sharpest weapons are finance and public opinion. 10,000 times cheaper than real warfare and completely silent. Some people will say, as long as manufacturing is strong, who cares about America's financial tricks? Honestly, that's fantasy fiction. Reality is this. Great power competition is about who has fewer weak spots. The U.S. is patching up its manufacturing gaps, pulling Japan and Korea to invest alongside it. So what about our financial weak spot? The most real scene today is they changed just a few lines of rules, and global gold and silver markets shook like an earthquake. Is that unfair? Absolutely. But the rules are in their hands. Finally, 3 straight truths for ordinary investors. First, if you can't hold for even 3 to 6 months, stay away from precious metals. Second, don't be overconfident and never abuse leverage. Exchanges can change the rules again at any time. Third, financial basics are not decorations. The future battlefield is right here. Remember this line. In someone else's casino, the biggest risk isn't the market, it's the rules. Our channel is to focus on important financial events in the world, get high investment returns, and post 2 to 3 videos every week. See you in next issue.